guys, you're welcome to my YouTube channel. This is Synthetic Goddess. In this YouTube channel, I teach strategies to become a profitable trader even if you are a beginner. So if you're new to this channel, kindly hit the subscribe button and turn on the notification bell to be notified whenever I drop any video. And if you're an existing viewer, I welcome you back to this video. Alright, due to high demand, I decided to create a Telegram channel to share my analysis, also for traders that trade synthetic indices to also share their analysis and their ideas. So if you would love to join my Telegram channel, just check the description box and check for the link to join my Telegram channel. Also, if you would love to trade with my broker, I trade synthetic indices. If you would love to trade with my broker, check out for the link in the description box to register for my broker. So in this video, I want to explain characteristics of major liquidity. In my last video, I explained the types of liquidity. I gave a detailed explanation about types of liquidity, and that was where I mentioned major liquidity as being one of the types of liquidity. Major liquidity, the types of liquidity. But you can't just mark a high or a low. You can't just mark a high or low and count it as your major liquidity. We have characteristics that determine if that is truly a major liquidity or it is not a major liquidity. So I'm going to be explaining the characteristics in this video right now. I'm going to be explaining the characteristics. Just follow me till the end so that you can get detailed explanation about this. So one of the characteristics, I'm going to be using Volatility 25 index for this video. Volatility 25 index, that is what I'm going to be using for this video. So right here, when we talk about the characteristics of major liquidity, the first characteristics of major liquidity I'm going to be talking about is inducement. Inducement. Whenever we have an inducement in the market, be it higher time frame or lower time frame, we have a characteristics of major liquidity. Now it is you that will be able to determine how far the market will go after breaking that major liquidity. Now you cannot expect the market to break lower time frame major liquidity and you will be targeting TP at daily time frame. It is not possible. You are watching markets break major liquidity on 5 minutes time frame and you are targeting the high of daily time frame. No, it's not going to work that way. Now we always have major liquidity even inside internal structure. We always have major liquidity inside internal structure, and this major liquidity are going to show themselves to be real major liquidity on the lower time frame. So you have to be very, very careful when you are selecting your major liquidity. Ensure that you are selecting it from the higher time frame. So that you can get to know how far the market will move or how far you will stay long in the market. If you are selecting major liquidity on the lower time frame, you should know that what you are targeting is the next external liquidity on that particular time frame. You should know what you are targeting is the next external liquidity on that particular time frame. You are not going to higher time frame to go and select external liquidity for the market to take, and you are putting your TP on the higher time frame. No, it will not work that way. So carefully select your major liquidity on that time frame and target the external liquidity, that same external liquidity, on the lower time frame, on that particular time frame that you are selecting a POI or you are trading from. So now the first one I am talking about is the inducement. I explained inducement in one of my videos also. So if you are yet to check that out, I gave a detailed explanation about inducement. So if you are yet to check that out, you can also check it out so that you can get full explanation about inducement. Now inducement simply means what is that's high or low that is used to track you as a trader. It is being used to track you into the market early. the market is going to track you in very early, fake you out of the market, and start moving in your direction. That is what inducement is. They seek to induce you, take you out of the market and start moving in your direction. So example of inducement I am going to give. I explained two types of inducement too. I said we have the secondary inducement, we have the primary inducement. So here I'm going to just be marking out this I as break of structure. This is a break of structure to the upside. We have a break of structure to the upside here. We have this low formed immediately after a break of structure, which is our inducement. This low, we had this low as our inducement, as our secondary inducement. Remember, if you are trading, if the market is going, if you are trading the market, if you are having momentum and distance, there is a different way to read your inducement. You are not just reading it as secondary inducement and primary inducement. Like I taught you, the low created after a break of structure to the upside, the low created, that is our inducement. That is if we are having distance and momentum. But in this case, I'm going to be marking out the secondary inducement. Right here, I am going to be using the secondary and primary inducement here. So we have the secondary inducement here. This is our secondary inducement. We've marked it out. The market has taken this. The market used this low in taking out this inducement. The market used this particular low in taking out this inducement. We had a take of that inducement. Okay? So we are marking out this low. We are marking out this low. So here is our major low. This is our major low, and that is why you would notice the market came back but could not break this low until we broke this idea, until we broke this external liquidity. We had the break of this external liquidity. This is a break of external liquidity, which our target is this. This is our target, and then we had a very good move to the upside. We had a very, very good move to the upside. So here we go. So here is our major liquidity. If this low is violated, it simply means we are in a total change of trend. We are in a change of trend. If this low is taken before the external liquidity is taken, it simply means we are in a total change of trend. Now remember, I am marking this major liquidity out from H1. I am marking it out from 1 hour time frame. I'm not marking it from the 4 hours time frame. I'm not marking it from 5 minutes time frame or 1 minute time frame. Now, if I am going to be placing any trade here, I am going to ensure that I am also setting my SL and TP from this particular time frame. I'm not going to daily time frame to go and select my TP. No, I'm not doing that. I'm not going to do that. So if we violate this low, it simply means we should be looking for a continuation of sell move to the downside, because we already have an inducement here. So we can now start looking for a continuation of sell move after breaking this. But until we break this, if the market does not break this, it simply means we are not looking for a sell move yet. We are not looking for a sell move. Now, the second characteristics of major liquidity is ounce of liquidity. Ounce of liquidity, that is a high or a low that market entered before breaking a structure. The high or the low a market entered before breaking structure. Now we had this high entered. This is daily time frame here. We had this high entered. We had this high entered by this. We had this high entered by this before we had this break of structure to the downside. Before this break of structure to the downside, we had that high entered. So here is a break of structure to the downside. Here is a break of structure to the downside. Now we are not expecting the market to just come and take out this high, because it is the high that haunted this high before breaking a structure to the downside. You can see it on different time frame. Now we always have a haunted liquidity before breaking structure, but for inducement we break structure before we come back for an inducement. I'm going to repeat that. We have a haunt of liquidity before breaking structure, and we have inducement after breaking structure. So this is a haunt of liquidity. We are not expecting the market to come back and take just that high. And the last characteristics of major liquidity is break of strong high or break of strong low, break of strong high or break of strong low. Now we had this low, we had this strong low broken. This is a very strong low, which is our structure range low. It is our structure range low. This is our structure range low. After we had it broken, we are not expecting the market to come back and take this high. If the market comes back to take that high, it simply means we are in a change of character. We are in a change of character, and it is the time frame you used in bringing out your break of structure and major liquidity that is going to determine how well the market will move or how long the market will stay. This is a daily time frame. I'm not expecting the market to take this high. If the market takes this high, I check the weekly time frame and see if it is a range structure or a normal structure. Then I am going to use that in determining how well the markets will move, to determine how far the markets will move. But right here, I have marked out my major liquidity. I am not expecting the market to take that high. If the market takes the high, I am changing my bias from being bullish to being bearish to being bullish once market takes that high. So those are the characteristics of major liquidity. Those are the characteristics of major liquidity that you really need to know. The first one, which is the inducement, the second one, which is haunt of liquidity, then the third one is a break of strong high or a break of strong low. If you see any of this, if market violates it with 1 pip, it simply means we have a break of structure, we have a change of trend. Once you are able to know all of this, you will be able to know when to change your bias when market changes trend. You will know when to change your bias when market changes trend. So these are the characteristics of major liquidity that you should know. Input it into your trading life, and then I'm very, very sure it's going to really, really help you. Have a lovely trading week, guys. See you in the next video.